Hey everyone, in this video I'm going to do an interesting comparison answering which stock is the better buy. Is it StoneCo Limited or is it Nu Holdings? Each of these Latin American centered businesses are thriving, but only one can be the best stock to buy right now. So I'll look at three financial metrics and then towards the end of the video, I'll answer which one is the better buy. So let's get into it, starting with revenue. Looking at trailing 12-month revenue for each of these companies, we can see around July of 2021, StoneCo was well ahead of Nu Holdings, but Nu Holdings absolutely exploding, rising up to 3.527 billion in revenue. StoneCo not doing too bad with 2.26 billion in revenue. So each of these companies demonstrating solid revenue growth, and the economy they're operating in is expected to grow rapidly with a continuing shift from legacy methods of doing business over to digital channels. Things like shopping online are growing at a faster rate than they are in the US. So things are looking bright for these two companies. The next metric I wanted to compare these two companies on is cash flow from operations to sales. How good are they at turning sales into cash flow from operations? This is an important metric that I look at often when I'm comparing companies. Now, looking at this metric, I noticed two things. First, I noticed Nu Holdings explosive growth into positive territory here, explosively reaching positive cash flow from operations, and also being ahead of StoneCo here. So Nu Holdings at 21.88% and excellent explosive growth here. StoneCo at 17.65%, and over the longer term, flat-ish in terms of growth, in terms of expanding this metric here. Although I will say a 17.65% rate of turning sales into cash flow is solid, especially when you're growing revenue at the rate that StoneCo and Nu Holdings are growing revenue. That means your revenue is growing and your cash flow is growing along with your revenue. So this is excellent here for both of these companies in their financial metrics. The last metric I wanted to look at is the forward price to earnings, and I'm using this to measure valuation. I'm looking at which company is more expensive, and looking at this metric, I noticed StoneCo is more than twice as Nu Holdings is more than twice as expensive as StoneCo, trading at a forward price to earnings of 28.58 compared to StoneCo trading at a forward price to earnings of 13.34. So even though I like that Nu Holdings is growing revenue faster than StoneCo and Nu Holdings is expanding cash flow from operations faster than StoneCo, I do not think that it deserves a more than 2x valuation premium over StoneCo. So, for that reason, if I was to choose one of these two excellent growth stocks to buy today, I would choose StoneCo primarily because of the cheaper valuation, fully acknowledging that Nu Holdings has done better in revenue and cash flow from operations growth. I just like the fact that StoneCo is trading at less than half the valuation of Nu Holdings here. So there you have it. If I was to pick one of these two, I would pick StoneCo today. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.